All right, what's up, everybody? Welcome back to the channel. So Bitcoin has a nice little move yesterday in the first of the quarter. We had a big breakout yesterday and smashed through August's open. We also took out this descending trend line to the upside here and September's high. As you can see right now, Bitcoin is currently trading or trending back to the upside here as we're taking out yesterday's high and moving up. It is consolidating here, and I do still have a bullish bias on it. I definitely would love to see upside continuation beyond September's high. You look at the monthly chart, you can see Bitcoin is currently trading above the highest monthly close of all time, which would be monthly resistance, and there is your September high. So for right now, you do have a breakout occurring. Obviously, you're not breaking out of August's range yet, but the fact that you're breaking out above September's range means we could repair what was broken in August. So August's high, which is the all-time high, could be the upside target. So what happens if we lose September's high and we get back inside the range? Well, on the very near term, it would look, pretty weak. It wouldn't mean that the uptrend is over or broken or anything, like that. But I would like to see it pull back before it takes off, because it did go without me as far as an intraday scalp is concerned. Of course, I own Bitcoin in cold storage, so I absolutely love it when it's going up. But is it time now for Bitcoin to break out? We know that historically, August and September are both pretty bad months for Bitcoin. And now we're in October. This is the start of Q4, and we want to see Q4 do what Q4 usually does and have a nice, huge rally. So we'll continue to watch Bitcoin here and see what it does. You've broken out above all major moving averages, above all the VWAPs that we watch. Literally almost every indicator that you can look at right now is going to show you that Bitcoin is bullish, and it has bullish momentum, as that was a pretty good move yesterday. It was up over 4% at one point during the day. However, if you are on the bearish side, if you want to look for shorts and whatnot on Bitcoin, where would you be looking to do that? Well, there's a daily supply zone over here that people are going to be watching and paying attention to. You could potentially watch for shorts there, but I think it would be much easier. I think if you get above the day high, which is right here, and then reject that price, you don't even need to come up to that daily supply zone. If you're trading above this swing high, I think you should not be looking for shorts. The macro supports a bullish market. Everything that's happening right now in economics, if you will, supports a bull market. There's really nothing out there that suggests we should be looking for bearish trades in risk assets. But if you are, just watch that last swing high, the daily high. You can manage your risk from that point. I think it would be pretty easy to do so. If it's going to continue to trend up, then obviously you're going to get stopped out. So that's Bitcoin in a nutshell. It's trending higher. You're above everything that matters. The only other pertinent level to break is going to be the all-time high. Now, if you do fail here, like I said, it's not the end of the trend, but it would suggest, or looks like, that October is potentially looking for a bearish engulfing candle, and that would be pretty damn bad, in my opinion. So we're going to continue to watch it here. We're going to see what happens. Instead of shorting Bitcoin, I think if you want to short something, you should short something that's weaker. Yesterday, Fartcoin didn't really have a huge move, but it's doing good today. It's up 7% right now. Even though you're seeing a 4-hour candle pullback here, this asset is up 7%. Yesterday, it only got up to about 5%, while Pingu was literally ripping faces yesterday. Smashed right through September's open, busted right back through the daily 21 exponential moving average. You're all the way back up into September's VWAP. So here's September's range. We took out August's low. We closed below August's low. So really and truly, you can't say that Pingu is still, bearish and while you're trading up here. But, I mean, it doesn't look bearish on the long term, right? we're trading up next to the yearly opening range, so it is still bearish on the year. Last 2 months were bearish. So this trend could continue. Right now, if we were to fib, I understand this chart is dirty. If we were to fib this range, you can see right now you're testing the 382 of September's range. So even though yesterday was a big move, you still are deep outside of that range or inside of that range. You haven't gotten near the midpoint yet. So this does, even though it's an aggressive bullish move yesterday, does kind of still look like a dead cat bounce, if you will. So if you want to short, if you think Bitcoin is going to roll over, instead of shorting Bitcoin, maybe short something like this, Pingu or Fartcoin, something that is weak on the year. Now Fartcoin is down, or yesterday it was down almost 30% on the year, or a little bit over 30% on the year, whereas Pingu is only down a couple percent on the year. It's down like 6 or 7%, I think. Let's go look real fast. Yeah, 6% right now on the year. So this is down on the year, but it has a lot more to give as far as a bearish trade would entail. When you want to look for something that's going to go down, I would rather look for something that has more meat to give. Other people would rather short the most weakest. It's your choice, right? I leave that up to you. But right now, currently, Pingu is checking the last 4-hour candle's low. It could act as support. We don't know what's going to happen today, but daily EMAs right here. I would love to see upside continuation from here if you have a bullish bias. If you have a bearish bias, you want to see this reject. You want to see it start to reject pretty soon. And we'll see what happens today. Obviously, we're going to be live, so we're going to trade it. All right, so there is a little bit of drama going on in the way of Netflix. Let's pull up Mr. Asmongold here, and he did post a video right here, why people are boycotting Netflix. I'm not going to get into the politics of it. All right, we try to avoid politics on this channel. We're only specifically looking for opportunistic times in the market. So Netflix is being talked about right now in the news. So I don't know if you remember, but Budweiser got basically embargoed as well from the public when they did something the public did not like, or the majority of the public, I should say, obviously. So if this happens to Netflix as well, then you could see a lot more downside on Netflix. It would have to get mainstream, I really think, before Netflix's stock price would get, hurt bad by it. It might not even get hurt bad by it, because obviously Budweiser and Netflix are two different companies. The way they make money are different. If everybody that's in the mainstream were to start canceling memberships and things like that, obviously that would have a negative effect on Netflix's bottom line. So instead of talking about the politics, is there a legitimate short to even look at here? Well, my answer to you would be yes. Simply because you're trading under the daily 21 exponential moving average, you're trading under the 50 on the daily RSI. You are like right now trying to break down into bearish momentum with the RSI. If we go look at the weekly chart, you are currently right now trying to break down below the 21 exponential moving average. So your 21 exponential moving average is coming in at 1179.73. That's right here. So if you close the week under the 21, this is when we start to look for bearish trades. This is when we can say, okay, this is a little bit more deep than a normal correction would be. So we need to start being careful and positioning for downside hedges at the very minimum, right? So obviously Netflix is still strong and it still looks okay up here, but you did have multiple weeks of pullback. Then you consolidated that pullback. So in a sense, what you have built here would be similar to like a bearish flag, right? There's your trend, your bear flag. So if it does break down, which it is doing right now, right here's the trend line. If this breaks down and you get downside continuation, you could see a further push, and then we could threaten August's low. So right now, I'm not going to look for the short on Netflix today. I would rather catch it around the daily 21. The daily 21 is all the way out there, so I might not get the opportunity to do so. Today is, or yesterday, I should say, was the first day that you broke down below this trend line. The trend line is just from the low that was set on August the 5th and the low that was made on September the 15th. It's just the bottom edge of this bear flag, right? The flag is much longer than the pole is at this point, so I don't know if you could even legitimately call this a bear flag, but it is the same. It's the same concept, right? You made lower lows and lower highs, then you consolidated that range for a very long time, and now it's breaking down to the bottom side of that range. So typically we would be looking for downside continuation from here. But since yesterday was the first day that we did break down below the trend line on Netflix, we have to be cautious because pre-market, once the market opens, let's see here, did we take out the lows pre-market? Okay, you did. You've already taken out yesterday's lows pre-market. Let's see if we take out or open under yesterday's lows when the market opens. Because once you put in a fresh low, at that point, you would want to see downside continuation. If it starts to trade up, it could be making yesterday a trap. This happened to us on the gold short when we were looking for the symmetrical triangle break on gold. Once it broke down, if you remember, it put in a nice big down day. And then the couple days after that, it traded back up into the range and then reversed straight up to the upside because so many people were caught short on the bearish trade. The same thing could happen here on Netflix. One day break doesn't necessarily mean that we will see that downside continuation happen. So our exponential 100 on the 30-minute chart is up here around 1184. That's just a little bit under September's open. So maybe if we can get a retest of this area in here in the coming days. Now, earnings is coming up on the 21st of October. So you got a couple weeks before you get to earnings, but it's still going to affect any near-term trades. Be careful with that. But I would much rather see what it does on a retest of September's open and the trend line here. If by that time the exponential, the 21, can get down here, I think that would be a much better area to look to put on that short. And I would be looking to put on that short from a long way out. Just simply meaning I want to put like 150 days before expiration and then down like maybe around the $1,000 or $1,100 area, somewhere down in here, right? So by going way out in time, I can basically get rid of that near-term volatility that we may see on Netflix still. Now, the trade is going to be a very, expensive trade to put on, but you can see right here, just by going down to the $1,000 strike, if we were to put on a spread like this, like a $40 wide spread, that would put us risking about $1,000 for a potential profit of about $3. So it's a 1 to 3 risk to reward. Netflix moves a lot, so these options are going to move a lot, even though we're out 197 days on expiration. Basically, by doing something like this, it just gives the trade time to work. So we'll see what happens, but I don't want to put it on today, right? I got to be very clear with that. I do not want to put this on today. I want to see what Netflix does here on the near term. If it breaks down and starts to go, then I'll wait for another consolidation period before I look to put that short on. But I do think it is a stock to keep on watch. Super volatile, moves a lot. There's plenty of potential profit in this one, regardless of what's going on in the politics. All right. So that is Netflix. I haven't really looked at too much of the other tech plays. It does look like Apple's getting ready to make fresh all-time highs. Microsoft has already made fresh all-time highs, pulling back up off of that a little bit. Nvidia currently making and trading up at fresh all-time highs. Amazon. All right, so Amazon was one. Amazon was one that everybody was watching. People were getting very, very interested in trading Amazon. And I mean, I see why. You're trading at the yearly opening range right now. So you're trading under it. And the weekly doesn't look great. Last week looks like a breakdown. You closed back the weekly back under the 21. So right here, right now, Amazon doesn't look good. But once again, this could be a buying opportunity. You are at the bottom of a range. You haven't broken down out of the range yet. You're in a multi-month range, 1, 2, 3. You're starting on month number 4. So you would literally need to break down below August's open before you could even say, or September's low, before you could say that you're trending. So right now, because you're trading above September's low, you're no longer trending, you're trading sideways, you're back into the range. So a scenario like this would be better for like a put sell strategy. If you have the money in your account to cover those puts, that is, you could look to sell like the $200 strike or the 205, something like that. And then if you break down, then you would have to ask yourself if you even want to take that fill. But the rest of the markets are bullish. Most risk markets are doing okay. So are you looking for a breakdown here? Right? I don't know that I would be. Now, if it starts to trend under those September lows, then we can talk about potentially shorting Amazon. But I think as long as you're trading above those September lows, even though you're trading under the yearly opening range, you would have to have more of a bullish bias here. All right. So just keep it on watch. I don't like to buy it when it's trading and closing dailies under the 21. We tested the 21, not the 21, sorry, the yearly open. We tested the yearly open yesterday and we did close up on the day strongly. So we closed higher than the midpoint of yesterday's range. So it does look like it's trying to break back out or break back above the yearly opening. So if you want to short it, I think you could be looking at the wrong side of the trade, but you never know, right? You never know. The 100's right here. So you could maybe use that to help mitigate your risk on the near term. So you did have a downtrend move. Notice how once you got down here to the yearly open, let me get rid of the weekly 21 exponential line. So that way you can focus directly on the yearly opening range and look exactly what price did coming into it. It had a little bit of downside momentum. Once it got here, you've in a sense lost that momentum. So you are consolidating the losses from this leg of price. You know what I mean? But you're just overall in a big range here. So you're really not trending. If this was trending to the downside and we weren't in this bigger range, then I would be more prone to look for the short. But I think you should just be careful here. I'm going to wait for the lows to get taken out before I start to put on downside risk on it. It might be a buy today. I can't buy it. You shouldn't either, because I never want to take a position into resistance. And clearly, this is resistance, 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 resistance. So I don't want to try to get long into resistance. But what we could do is wait for the break back above. Then we could wait for a pullback into this level and see if it acts as support moving on. But if you think it's going to be a rejection or a reversal right here today, then you're trading under it. You know what I mean? You are currently trading under it. I think the markets right now are bullish and everything supports bullish markets. I think you should be looking to buy dips. My honest opinion. IWM made fresh all-time highs, consolidation happening. So now that you do have a consolidation happening, you should be looking to be a dip buyer. You're consolidating a weekly range, not really monthly range. The consolidation is still too soon. We haven't had enough time yet. You did come out of a 5-month trend. So, maybe we do consolidate this monthly range for a while. But right now, you're just consolidating inside of a weekly range. I think I'd be looking to be a buyer if prices were trading back down into this area in here. That would be my first shot at it anyways. All right. So down in this area, There is a daily support that you can look at right there at 236.40. So maybe use that as your area to mitigate risk on. I don't want to buy it here, obviously. I would much rather buy it down here at support. So that's what we got right there. ES currently breaking out all-time highs. No point in looking for shorts. This thing is ripping and rolling. Could it pull back? Can you scalp 10 points on shorts? Of course. If you're just a day trade scalper, that's different. But for long-term trades, long-term holds, I think people should be looking to buy support. All right, with all that being said, let's get back over to Bitcoin here. Take a look at Swissy franc yen. Yeah, let's go look at Swissy franc yen. CHF, JPY. So the yen is concerning to me right now. Let me pull that up real fast and see what it's doing. Here you go. Over here is the yen. Not a lot of people talking about it. That's because, not a lot of people focus on these things, but the Japanese yen is considered a risk-off currency. It always has been. It always will be. If you notice here for the last 4 days, the yen has been popping. This is after a fresh breakdown. We even took out the lows that we made back on August the 1st on the JPY futures. So last 4 days, been bullish. If we continue to see the yen push to the upside on yen strength and not based on dollar weakness, then I would be more concerned with the risk off look. Right now, if the dollar's pushing down, then we have to be, cautious on looking at the yen going up as a risk off move. But the thing is, it hasn't been going up based on dollar weakness. We looked at it all week. We were watching it all week. Basically, the best way to see when the yen is strong. Here, let me pull this up for you real quick. So today, everything's a doji, right? The DXY is a doji. Here, right here. The DXY is a doji. You're literally at 0.00. That is a doji. And then up here, the yen is 0.05 to the downside. So a weak dollar today isn't affecting the Japanese yen in a strength-wise scenario. So if the dollar's weak, when the yen is up, we want to see if the yen is the strongest currency on the day, which it was yesterday. It was not the day before. The day before, Aussie was the strongest currency. But yesterday, the yen was the strongest currency while the risk markets had a good day. So we're going to keep our eyes on the yen. We're not going to get all out bearish just yet. We have a short on USD JPY, a long-term trade that will cover any yen strength in the future, right? So we're prepared. If the yen wants to break out to the upside, we're good. All right, Swiss yen, or Wes. What did you say exactly? Take a look at Swiss yen for a little FX fixin'. I mean, it's had a pretty. This is from the yen strength, of course, right? Swissy is another. It's another risk on, risk off currency, but the Swiss franc, people buy that for other reasons. The yen is mostly looked at as risk on, risk off, whereas Swiss franc is just a good currency to invest money into. So the Swiss franc has been strong all year long. It has been going straight up almost. Here's the year-to-date chart on the Swiss versus yen. Set the yearly low, ripped straight up, easy peasy. So the last 4 days, the yen has been strong. So you're seeing the yen strengthen compared to the Swiss franc. That's why you're seeing it pull back a little bit here. So, yeah, I mean, if the yen continues to firm up with dollar weakness, then this would be somewhere to potentially look to capitalize on that yen strength. Now, with that being said, you have to take into account that the Swiss will also potentially get bullish if we start to visit a risk-off scenario in the market. So you would be looking to get short this, but for the yen strength, but because of the Swiss strength, it's kind of like, it's like one of those trades that doesn't really make sense to me. It might make sense to you. Maybe the Swiss franc weakens while the Japanese yen strengthens. If that's the case, then this would come off pretty hard. It is extended, but I mean, on the daily RSI, it says you're not extended. You're not extended at all. So this thing can continue to go up. Now, I do like the momentum of the breakdown here. So the way that I would trade this moving forward, Wes, is I would be watching this open and this high. As long as we're trading under these two levels, I could hold Swiss yen shorts. Pardon me. Yeah, I could hold Swiss yen short. So I would be looking on the smaller term or the small time frame charts to put that entry on, like a 4 hour, 1 hour, whatever floats your boat. You are consolidating the breakdown from yesterday here. So it would be dangerous to put on a short this far down after the last 3 days have already trended down. So it would be dangerous to put on a short here, but I could if it fails to get upside continuation, right? If it just peaks its little head above and then drops back under, maybe then we could look for a short, but we want to see that act as resistance before we could really focus on an expansionary phase to the downside. But I like it. I mean, I like yen strength right here, right now, but I mean, it has been strong. It could just trade up into, it's still range bound. The yen is so range bound. The yen's got a lot of work to do before we're really going to start like screaming from the rooftops about it. Right now, I think the markets are okay. Right now, right? There's some talks about Russia and the EU and all that, but we're not really seeing anything pan out from that stuff. Rumors were saying that Russia was declaring war on the EU last week. That's essentially why I got out of the oil trade, which was a mistake in hindsight to get out of it. Wasn't a mistake to get out of it on Friday, because if a war broke out over the weekend, oil would have gapped up big, you know what I mean? So yeah, there's that. Here you go. I'm not going to be able to put on a position. You're in the middle of the range. We did put on a position here yesterday on the euro. So we're going to see if the euro can break out of this near-term range here. The euro looks like it should be a short. I'm not even going to kid around, right? I mean, if you're looking at this price action right here, it looks like a short. It definitely does. But you're trading at the 21 exponential moving average here. It wick, looks like rejection. This is at 618 of last week's range. So, yeah, technically speaking, as long as you're trading under July's open and under the 786, it could be a short. Last week did not break down and break any support levels or anything like that. It's just a very, sideways range here. But it does look like a short. So why am I long? Well, because the dollar started to give back some of that move that it had. And rate cuts, that kind of supports a negative dollar. So, yeah, if the dollar is going to weaken here because the market's pricing in more rate cuts, then I want to be long euro. Euro has the best DXY basket, or has the most percentage of the DXY in it. So it is the most inverse traded pair. Now, yesterday I took the long while we were doing the members only live stream. We were printing this candle right here, and I was wanting to see if it broke down below support and closed and then put in a bear trap down there. But that never happened. So I went ahead and entered the long as it was consolidating on the hourly. But I'm still more than okay with taking this stop loss and then looking to put the trade on a little bit lower. I did have it marked out. I don't know where that box went, but there was a box essentially that I was looking at. Let me see here if I can find what I was looking at. Yeah. I can't really see it. There's October's open. Let me get rid of that. Yeah, I don't remember why I was looking at that. Why I was looking lower, but I am willing to put on one more or try it one more time if it does break down here today. Because the dollar move, here, let's pull up the DXY real quick. The dollar move, everybody's expecting a weak dollar. Everybody, because of rate cuts. So it almost makes sense to run this thing to the upside because everybody is looking for the dollar to go down, right? Everybody, literally. Donald Trump wants the dollar to go down. Rate cuts suggest the dollar is going to go down. So it makes sense to me that we could see a deeper bullish push on the dollar. Now you do have the quarter open. So right now is a good time to put on a position on the dollar regardless of what direction you think it's going to pan out. You think it's going to go up? You could get long, maybe on daily open retests today, right? Maybe today. If you test the daily open and hold that area, you could look to buy that. So we just did that. Boom, boom. So we'll see what happens with it right here, but yeah, I mean, this was a liquidation run above that swing high. There's still all of that to liquidate. You've got multiple monthly highs here. Yeah, long term, you're still in a 6-month range. Long term, 6-month range. And we broke down for trend continuation to the downside in September. Now that got rejected. That's why right there, I think. That's what we were looking at. If we're going to see trend continuation to the downside on the dollar. Okay. So we've already broken out above the 786. I would want to see resistance for me to keep a bearish dollar bias. I'd want to see resistance hold at 98.118. If the dollar is strong enough to break above that, then I wouldn't have a near-term bearish bias on the dollar. The dollar could be waiting for next month to go down or next year to go down. Who knows? Maybe it isn't going to go down. Maybe it's already been priced in, all the rate cuts we're going to get. Maybe it's already been priced in. So we have to do what the market's doing. We see what the market's doing, we react to that. We check our bias at the door, if you will, what we think is going to happen. All right, so Bitcoin currently taking out that 4-hour swing high. So right there is where you would be wanting to put on your short position if you have a bearish bias. I do not have a bearish bias. I'm just saying if you do. Yeah. We did look at the liquidation heat map yesterday, and there was a lot more stuff to liquefy down here. Right? To liquefy. That's not the right term, but you get what I'm saying. There wasn't much liquidity on this push. There's a little bit of liquidity here. There was a little bit of liquidity down here. It wasn't until we got up into this region is where we started to really get into that liquidity. And then, of course, up there, you got a lot of liquidity. Let's refresh it. That was yesterday. I want to look at today. We want to look at the monthly. I don't really care about the day. So you can see on the monthly here, you did get all of that liquidity. So where is the next big level of liquidity? That would be all the way down here at the lows. Now, August's lows are down here, right? Right there's August's low. You never took that out. You did on Ethereum. Ethereum, you made fresh September lows. Bitcoin made September's lows at the first day of September and then trended higher all month long. So to me, at first we were just looking at it as a dead cat bounce, but you've broken out to the upside. It's no longer a dead cat bounce. We should have seen Bitcoin reject the 618 of September's range. It did not. It did for like a day or two, but then it broke out. So right now, Bitcoin is strong. Here's last week's short on Bitcoin. I'm trying not to make these charts go bonkers so fast. Just bear with me. I mean, there's really not much I can do about it. I wish it would, when I pull up a new chart, I wish it would come the way I want it, but it doesn't. For some reason, it's always scrunched up. But here you go. This was the short last week on Bitcoin. You are way above that. Way above that. So this is trending higher. This looks like a bullish break. So I don't think shorts are the right trade to make here. They could be, but I don't know. There's that daily supply zone. All-time highs are up at 124,533. Looks really good. Looks really good. You're way above September's VWAP. I mean, this thing looks really good. Let's go look at our total 2 crypto exchange. Looks pretty damn good here. Let's go look at the weekly. Yeah, it looks really good. Last week had a pretty significant down move. You're already testing last week's open again. So, yeah, it does. It looks really good for a breakout. That's total 2, so that's just minus Bitcoin. The total 3 is minus Ethereum and Bitcoin doing the same thing. Cryptos are not weak here. They are strong. They are threatening a breakout. Here's your others chart. Little bit weaker than the totals. This is the entire crypto exchange, excluding the top 10 market caps. So it's a little bit weaker, comparatively speaking, but still looks good. Still a semi-bullish trend. Yeah, each month you've made higher highs and you've closed higher each month. So this is a bullish trend. You are seeing upside continuation. So right now, Pingu is pushing down while Bitcoin is pushing up. So right here would be the buying opportunity on Pingu, 31185, as long as that area can hold. Your daily 21 exponential right here, that would have been a decent little spot to put on some risk. Let's go see where that daily exponential is for reals. Oh, wrong indicator. So it's a little bit higher. Yeah. I mean, it's a buying opportunity. If Bitcoin continues to be strong, I don't think you're going to see weakness in the alt space. Now, as far as momentum trades today, we have Zcash. Zcash breaking out to the upside, trading up at $151. This thing actually has monetary value associated with it, so it's not like a complete garbage token. You know, when they're trading for like way less than 1/100th of a penny, that's a garbage token. When it's got actual monetary value attached to it, not necessarily useless. Looking good. Not really a trade to take on it right now. But yesterday, it consolidated most of yesterday's range and then broke to the upside. We were actually looking at it yesterday, but we were unable to take a trade. There was the level that we were looking at. And then the other one isn't one I would trade. It's Giggle USDT. It's up 74% today. It has only 288,000 tokens traded on exchange. So very thin liquidity. Very thin liquidity. Not something I want to be participating in. Giggle, Giggle. Yeah, this is it. Not a whole lot of exchanges even offer this product. Just a few. Yeah, it's up 74%. Also has monetary value associated with it. It is pulling back. So you have to see if the consolidation holds. It's very, very illiquid, very thinly traded. All right, let's see here. Good morning, everybody. What's happening? An amazing day for Bitcoin. Yep, it is. I love to see Bitcoin rip and rock. When you get a chance, please look at you and let me know if you see a price going higher today. I mean, I'm not going to be able to tell you what price is going to do today or tomorrow. You know what I mean? I can't see into the future. I can only tell you what price has done and what my opinion on it is moving forward. Right now, it's trending. So right now, you're trending. You're trading inside last month's range. I don't know what that orange level is. It looks like it's just a monthly resistance. You're in a very, very long-term rounding bottom formation here. So clearly you need to close a monthly candle above 45.84. Long term. It could put in a cup and handle formation. It hasn't yet. It's working on it now. So a cup and handle formation is just a rounding bottom. You could look at it from here if you wanted. Or you could just look at it right here. It doesn't really matter. It's a long-term rounding bottom formation. The cup and handle is the pattern that a rounding bottom formation makes when you go into a multi-month consolidation, right? Because that consolidation is the handle. A cup and handle is like that. So basically what you are going to be doing is you're going to be watching for support to build inside the handle. If you're looking to trade this based on patterns, based on nothing else but a pattern. So right now you are putting in that consolidation. Last month you were still trending last month, but last month was the first month since June. So 3 months. Last month did not close above the previous candle's high, but it did close up. Not strong as it closed under the midpoint. So this looks like a legit pullback. So you will have to wait and see where support builds inside of this pullback. There is September's low. So I wouldn't be looking to buy it until we take out September's low or here at September's open. If you can't close dailies under September's open, then I would be looking to buy as close to September's open as possible. Now, if you break under September's low, then you're going to be looking at August's midpoint for the next potential area of consolidation. It's going to be roughly around 35.51. We can get the exact price. Oops. It's going to be 35.58. That's 2 cents is close enough, in my opinion. But let's just go ahead and give it those extra 2 pennies to be completely objective as possible. Okay. So you're in the process right now making the handle. Oh, here's the handle. So cup, handle. So you're going to be looking to buy the bottom edge of the handle, wherever that ends up being. Now, if you break down below this, you're no longer in a handle. You are breaking down. A handle for the cup and handle pattern needs to be a tight consolidation. So right now, since that's happening, right, it doesn't look like it's not happening on the weekly. The weekly is trending. It's not a consolidation yet on the very near term. On the monthly chart, you are consolidating. So you need to see if support comes in here. If support, I wouldn't be a buyer on this today because there's too much downside momentum on the near term. Downside momentum, when you break the 50 to the downside, that means the bears are not only in control of price, they have momentum. We never want to try to step in front of bearish momentum to buy a stock because the momentum alone can carry the price much, much lower. So we want to wait until we start to consolidate those lower prices. Then you can take a shot at it. It's, not the greatest time to be a buyer, but you got to buy support, and you can only buy support once consolidation happens. So it could be in the process of building support today. What I would love to see moving forward on this stock to be a buyer here is I would like to see it bounce up to resistance, like back up to $43, and then return back to this level and hold. Then I could be a buyer. I could set a trade like that, right? Entry, stop, take profit. Something like that. Based on a cup and handle formation or a cup and handle pattern. And that cup and handle pattern is playing out on the monthly. But it's a terrible looking stock. I mean, it used to trade at $200 per share. Now it's trading at $38 per share. So like 75% of its value gone. I don't know anything about it. As far as what they do, what they make, what they sell, I have no clue. Be careful. This formation could take a long time to play out. You could be like months before this thing actually builds in the support and then ultimately breaks out. But you definitely want to buy it in the consolidation, not after the breakout. If it breaks out, it might not consolidate here. It could just keep rolling over. It could come all the way back down to this. It's not going to come down that fast quickly, I don't think, but you never know. You never know. But your levels are there to watch. 38, 37.26, and then finally 35.58. If you're trading under 35.58, you are not consolidating. You have tested resistance, failed at resistance, and the bears are in control of price. Hopefully that helps, my friend. Nothing on the Bitcoin chart says a short. I agree with you. Oil dumpers. Yeah, oil dump. It really sucks because we had that trade on, but it is what it is. I can't catch them all. Can't catch them all. But yeah, Friday we put the trade on for the short after the liquidation happened. And boom, here you are. So all week, you've been making lower lows and lower closes. No reason to get out of this short. I wouldn't get out of the short unless you start threatening yesterday's high. Then maybe I would go ahead and get out or take profits and move my stop to break even. This price has stopped oil in its tracks for a long time. Look at this monthly chart. So you've basically been consolidating this area for a long time. Why does that say 5.4 and 5.94? What is this? Let me find the actual. Yeah, it does look good. It looks good for trend continuation. It does. You are trending under last month's low and the previous month's low. So August's low is 61.45. September's low is 61.45. Same price. So right now you're trading under that. So this is the level to break and beat. If you can beat this and break this, you could see it fall down to 58.29. Here, let me mark that level so you can see just how much more this thing can go. Yeah, this thing could break down all the way to here if it can't hold this level. So big level to break here for oil. Are you going to see downside continuation? I'm going to be so mad. It's probably going to happen because I got out of my short. We shorted this price right here, 65.96. So it more than likely will break down because I'm no longer holding the short. Yeah, it looks good for a breakdown continuation. It does. I wouldn't be taking a fresh short here, though. Not after 4 solid days of downside. Give me at least one up closing day to participate in the short. At least one. So Pingu not holding the previous 4-hour low. What's going on here, Mr. Pingu? Daily, so this is the area to be a buyer if you're looking to be a buyer. Yesterday was such a big move on Pingu. To be honest with you, today could just be a sideways consolidation day. If you're looking at it like in the form of a 3-bar pattern, like a 3-bar expansion play. For anybody that's new, a 3-bar pattern. For me, obviously, white candles are up candles, so green. But a 3-bar pattern is just when you have a bullish expansion and then you have a bearish pullback that doesn't break the midpoint. That looks similar to that. And then ultimately your 3rd bar would be something like open and then go, right? That's a 3-bar pattern. 1, 2, 3. So if you're going to see something like that happen here on the daily, not the 4-hour, but on the daily, we have 1 day expansion. We're currently down 0.85% on the day. So this is your day open. So you are red today. So the whole day could just trade sideways and choppy. You could trade in between this level and that level up there all day long. And then when we get a new candle tomorrow, you could put in a fresh daily low and then rip. So if it doesn't break down today from this level, but still doesn't go up, you could still, in theory, be a buyer at these low levels in here. Right? And that would be tonight at 8 p.m. Eastern Standard Time, because that's what time each daily candle starts in crypto. 8 p.m. Eastern. Until we change times, and then it will be 9. But that's not here yet. So there's your bullish expansion. Today could be your consolidation pullback day, and it could pull back as deep as the midpoint of yesterday's range and still be okay for the long. So for the shorts, that's probably where I would, if you were looking for shorts today, I would probably not be target. Actually, I wouldn't even target the midpoint because it's under this daily res. So I would put my take profit somewhere above this level here. Like I would just put it at like 3004. If you are short or looking for shorts, I would not look beyond that. It could go beyond that. I'm not saying it won't break down. I'm just simply saying that's where, if I was looking for the short, I don't have an edge here. I'm actually more long-sided biased on Bitcoin right now than I am short-sided. So I can't really buy it because it's at fresh highs. I don't buy fresh highs. The risk markets are right now testing the high weekly expected range. Oh, here is your cash market S&P 500. Right now you are testing the high week expected range. This is just where the options market priced in the risk for this week. So it does make sense that you're seeing a slight pullback from here. But basically all you've done is filled the gap. We had a rejection of the yearly opening range here on Thursday of last week. Then we opened above it yesterday and broke back under it. So the VIX is being sold here, and we know why. Yeah, and as long as it's trading under that, I have a bullish bias. And then, of course, gold is just flat out ripping still. I mean, it's pulling back today, but damn it, it's making fresh all-time high after fresh all-time high. Crazy move here on gold. Crazy move. And dominance also weak today. This is your daily chart on dominance. Daily candles bearish. So that could help alts. That could help alts. Keep that in mind. Well, while you are trying to short things. Fartcoin pulling back. Fartcoin's a little bit harder to trade because it's way under its previous 4-hour swing low. I guess this 4-hour swing low could come into play next, if you even get there. Because obviously you've got the open to contend with. So it'd be like almost see if it builds in support on an intraday basis today. If it does anywhere around these two levels, then I would probably be looking to be a buyer going into late session. Give it plenty of time to build in support. And there's just not a whole lot to do today. DXY making a fresh high, so it took out yesterday's high. So my Euro USD trade is probably stopped out. Not yet, but it's going to be. Unless it rejects here. And it could, because that's yesterday's low. So if this is just a stop run, why do I could just do that, right? If this is just a stop run, then it has pretty much ran the stops. There really is no point for it to go lower, other than obviously the sellers have won the battle. Then it would go lower, you know what I'm saying? But if it refuses to go lower here, then this could be a buying opportunity on the euro. Give it some time. You don't have to buy it right this second, but just give it some time to see what happens here. Let's get rid of the fib. We don't really need it. And let's label this yesterday's low. I mean, obviously I could be wrong on my bias here. That's why we use stop losses. Because we can't predict what price will do. If we could predict what price would do, there would be no point for stop losses. All right. But yeah, I don't want to be continuing to lose money if we break down below this weekly open here. Which isn't last week's open. It's this week's open. So at this point, it does look like a failure based on the weekly candle structure between last week and this week. You rejected up around the 786. Right there's the 786. So there's where you would have wanted to put on shorts on Euro USD. So time will tell, and it does look like we're going to be wrong here on this, which means the dollar wants to firm up. So if we end up losing this trade to the downside and it looks weak moving forward, Then next week I might have more of a bearish bias. We'll see what it does, right? Depending on what it does. But it doesn't look like it's just a stop run. Not right now, it doesn't. Still 2 hours and 49 minutes. The 4-hour candles for Forex are 1, 9, and 5. 915, 915, 915. For crypto, it's 8, noon, 4. 8, noon, 4, 8, or not noon, but 8, 12, 4, 8, 12, 4. You get one 4-hour close at 8, 12, and 4 all the way around the clock. So a lot of time still left on the 4-hour candle. Right now, it does not look like just a stop run. Right now, it does look like it's trying to break down out of this consolidation. So be careful. Don't be putting on longs right this second. If you got to give it time. But we'll see what it does. It looks like it wants to break down. So there will be a lot more trade to take here on the euro if it does in fact break down today. Because it will be a fresh breakdown of the 21 after testing the 21 for multiple days. That's the reason why I'm like, don't be buying it if it's below that price, because it's not just a stop run. We've tested the 21 exponential for 4 days, counting today. And you've not been able to break out to the upside. So it does suggest that the sellers are in control of the euro. Looking pretty rough there. That doesn't... That's not necessarily bearish for Bitcoin and S&P, but both of them, S&P's pulling back. I mean, it is what it is, right? It is currently pulling back. Here is your futures S&P. So you are pulling back this morning. Quarter open all the way down here. So there are a few levels to watch. But remember that yen is going to be important moving on here. If the yen continues to rip and rally, then S&Ps will pull back some. Good morning, friends, says Lifestyle Media. What's happening, my friend? I am short pound dollar, Wes says. Let's go look at pound dollar. Let's look at Aussie yen real quick. Where did it go? There it is. So Aussie yen ultimately did break down. Yeah, the high here close. It's the highest yearly close on this data feed. On other data feeds, longer term data feeds, you probably have higher yearly closes, but yeah, it's a pretty expensive area for the Aussie yen up here. Back under the yearly opening range. So if the Aussie yen dumps, that will also smell a little bit dangerous for risk assets. There's your 21 on the daily, weekly, all the way down here. So technically speaking, you could pull back all the way to September's open and still be okay. Technically speaking. Pound dollar. Wes is short. Wes is right. That is an old level there. It is September's open. Beautiful place to put on risk. Wes, good job. Hopefully you nailed it right there. That would have been a level to watch for sure. So yeah, I didn't even think about that, but I should have done something like that, something similar. I should have basically hedged off that trade. But good trade, man. Good trade. It's a lower high, too, so It's not really a parabolic trend. It is what it is. It could build in a channel. Forex doesn't trend that often, but when it does trend, it can trend for a while. And since this thing has been sideways for a long time here, essentially 1, 2, 3, 4, 5, 6 months, you've been range bound. So if it breaks under the August low, you could see a fairly deep correction take place. But there is a lot of trading to take place before we get to August's low. So we may end up, yeah, you could probably target September's low, Wes. Yeah. Good trading, man. Fantastic stuff. What is Netflix doing? Netflix is ripping to the downside, so it's going to go without me here for the very first portion of this move. We should have put that on already. I can't do it though. I need it to pull back. I can't sell it while it's breaking down. But man, this could be very, very bad for Netflix. Very bad, as Budweiser has not recovered yet. Budweiser has not recovered since, well, Budweiser, to be fair, has been losing its prices since 2016. But 2020, it had a really bad year. And then when all the boycott happening. So they basically haven't recovered. I don't think that this will go that bad for Netflix, but you never know. That's why I wanted to put on a short. I gotta wait though. You're breaking down now, and that looks like trend continuation for sure. Oof. Looking good. We will get a position put on Netflix eventually. It will give us an update or two. That's when we will attack. Good morning, Paper Wiggleman. What's up? Hello, pretty boy Heath. Thank you, Slothbag. I heard a story about you when you were in high school. Asmon is a Cheeto finger grease ball. Yeah. I'd like go to him for my news, if you will. No, I'm just kidding. He's a very popular person in the internet sphere, so yeah, anytime he starts talking about a tradable company, I will throw it on watch because he has a very, very big audience. He is like one of the top 5 streamers in the world. So yeah, I like to keep an eye on sentiment, if you will. Morning, everyone. ZEC doing its thing. Yep. Amazon Day is October 7. That's true too. All right. Wes said he got short again. Can I check? Wait a second. XMR going up. LTC going up. Zachariah going up. What is this? 2017 coin? Yeah, I mean, it never really ended. We had to be cautious while the dominance chart was consolidating, but if the dominance chart ultimately, it's not over. Let's just put it that way. I mean, your alt season not quite over yet. As long as dominance is trending to the downside, alts can pump. Alts can pump. It doesn't really matter what dominance is doing. Alts can still pump because if Bitcoin is pumping, Bitcoin is like the tide that lifts all boats, right? So alts can pump. The ones that got beat up the most, like Fartcoin, Bonk, and Pingu, basically got a pretty big move yesterday from that. So we will see if they get upside continuation. So bonk right here looks a little bit worse for wares than say bonk and or than say Pingu, right? Fartcoin is still up almost 6%. So Fartcoin, it didn't do nothing yesterday. While everything was pumping hard yesterday, Fartcoin did nothing. Now you're seeing that breakout on Fartcoin. So right here could be a long on Fartcoin. We'll see what it does. I mean, Bitcoin is setting the absolute perfect trap for bulls if it does want to go lower. That's why I said just continue to watch this level. If you want to short Bitcoin because you think it's going to be a bull trap, this is the level to watch and potentially the level to put the risk on. For Ethereum, it didn't make a fresh high. But Ethereum is testing September's open here. So maybe instead of looking to short Bitcoin, one could short Ethereum. Because Ethereum still has that dead cat bounce look. Structurally speaking. Now, clearly on the monthly, Ethereum is stronger than Bitcoin because Ethereum had a up month in August. Whereas Bitcoin was bearish for the entire month of August. September was bearish for Ethereum. So right now you're kind of testing monthly res on Ethereum. So if Ethereum fails to get bullish continuation above this previous 4-hour candle high, then that might be the area to mitigate risk from. I think as long as you're trading above that level, then clearly it's threatening to make a fresh day high. Bitcoin does not look like a bull trap. So I would have more of a bullish bias than a bearish bias here. Like I said, Fartcoin is pulling back pretty heavily, but it's still up 4.88%. This is your day open right here, all the way down here. So basically you're checking the midpoint of the daily range right now. Right now. So right now would be like, it's got a little bit of bearish momentum on the near term. Like on the 15, 30 minute is testing bearish momentum. Damn, that would be a better buy down there. So I'm going to keep Fartcoin on watch here for a long today, potentially. But right here could be the first spot to put that risk on. Yeah, since it is one of those days, it's probably going to be better to put a little bit of risk on for a downside position and a little bit of risk on for an upside position. Because it is one of those days. But Fartcoin currently up 4%. So people are going to be shorting because they think it's, you know what I mean? I think it could be a buying off. It looks pretty bad on the 4-hour. Looks okay to me, though. Let's see what we got going on up here with the volume. Where the POC is. POC is up top. I bet the POC is up top on everything. POC up top on Pingu as well. POC was up top yesterday on Pingu. The POC on Pingu came in early, though. The only way I would go back to having a bearish bias is if you like give back every bit of this stuff on Pingu. Pingu would have to break back under August's low for me to be like, oh, maybe this was a bull trap. Bitcoin does not look like a bull trap at all. Notice where the POC is. Low, low, low of day. Some would argue that that's okay. That's good for bearishness, but I wouldn't. I like a higher migrating point of control. It suggests strength and huge momentum. So yesterday, this would have looked like a short. Right? If you were looking at yesterday's price action, would have looked like a short. Point of control, then point of control. But it blasted out. Boom. See ya. So be careful. Bears be stuck, man. The bears be stuck. Bartcoin. It's so weird that it is doing it today and not yesterday with everything else. But the breakout today, it signifies strength because it didn't break out yesterday. It was consolidating. The longs were trying to pump Fartcoin yesterday. You know they were, because Bitcoin and Pingu and everything else was ripping yesterday. So you know the buyers were like, oh, Fartcoin's going to go. It just hasn't yet. So they jumped on it. And they were right. It didn't go yesterday, but it did today. At one point today, it was up 10%. Gosh, Fartcoin's amazing. The volatility is just amazing. We'll change this. Wait. There we go. So no, that has to stay over here for the Monday candle. We have to put a blue one on here. Perfect. Yeah, it looks like everything wants to go higher. I booked 3-1, 2/3 position at yesterday's low on pound and riding it rest September's low. Nice. That's good trading, man. Can I look at Ethereum? Yeah, we did just look at it. I'm not necessarily sure what you want me to do or what you want me to say about it, but I mean, here's my opinion. If Bitcoin is bullish, I like most cryptos to stay bullish. Generally speaking, not all of them, but you know, like kind of across the board. Bitcoin is the tide that lifts all boats. So as long as it's doing good, then other alts will do good as well. Ethereum is the second favorite. It's the second biggest. So with that being said, they kind of do sometimes trade on their own merits. Sometimes Bitcoin's bullish and Ethereum is bearish. They're not one for one. But it looks okay here. It looks okay. On the high time frame charts, it looks really good. You set the low in April, and it's just been trending higher all year, and it had a pullback last month. So last month would have been the time to be a buyer in hindsight. But at last month's lows, down in here, you could have absolutely been a buyer based on the fact that it's the low of the month and it's late month. That's why I was telling people I wouldn't be looking for fresh shorts on Ethereum late month. You're getting ready to open a whole brand new month. Now is not the time to put on positions. Like September 26th, September 27th. You're getting ready to open a new monthly candle in just 3 days. A brand new quarterly open also. That's huge. So it looks really good. It looks really good. Now, obviously, September's high is way up there. But still, it looks a lot better than it if it was. It's not bearish, right? So as long as, why do I keep hitting the L? As long as it's up on the month. Now it is just the second day of the month, but October is typically a good month for crypto. Move this over here. Let me pull up. What just happened? So Bitcoin monthly returns, October. Look at this. The average for October is 20%. The median is 14%. So typically speaking and historically speaking, Bitcoin does really good in Octobers. Look at some of these numbers. Like there's a 28% month. There's a 39% month. Wow, you can't see that either. 27% month. A 47% month. 33%. A 14%. Like 60%. It does real good in October, historically speaking. So if you were taking positions based on history, then you would want to be bullish going into Q4 or going into October. So at the open of the month, you would want to buy. And look what they did. That's the open of the month. They started buying Ethereum and Bitcoin during the London session. This is why I consistently say this. The quarter, year, and monthly opens are my favorite times to trade. Because sometimes you can get lucky and put on a position and hold that position all month, quarter, year. Boom. Easy peasy. And you can break it down and go intraday. Asian session. London session. So you literally put in a fresh low of day at the London session open on Ethereum. 1 hour later, you were trading back above the October open. 4 a.m. The algo said, bye, 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 bye. And here we are today. So, yeah. Same exact scenario on Bitcoin. 4 a.m. The algo's fired up. Bye, 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 bye. So today could be a pullback, range-bound, sideways day. We may not see further upside continuation on Bitcoin today. But I don't necessarily want to short Bitcoin either. I would rather short something like Pingu or Bonk or Fartcoin, something that is weak on the year. And Bonk is getting hit pretty good here. Don't necessarily, it's a weekly color, so it might be the weekly fib, but I mean, Bonk didn't really do so great yesterday. So Bonk looks a little bit worse than the rest of the cryptos, because look where it reversed, right at the 618 of last week's range. So for now, this looks like a dead cat bounce on Bonk. It's flawless. It's beautiful. And it's pushing. But only time will tell. Fartcoin is pushing. So it might not be the time to put on risk on Fartcoin. We'll see what it does. If it gives back everything, then obviously this could be a bull trap, right? Pingu testing the daily 21 exponential right now. So can't really take a fresh short or anything like that right now, but earlier today it would have been okay. I think the best time to be looking to see what's going on today for, tomorrow, because yesterday was the big expansion for Bitcoin, will be closer to the Asian session today. POC, POC, point of control, is what POC stands for. Point of control. It just means where the most volume traded in the daily range. So when I look at the volume, I like to look at volume by price, not volume by time. I will occasionally throw out volume by time, but I really don't use it in my analysis. I like to look at what price did the most of the volume happen, because you can get an understanding of what's going on with the objective price levels. So like if you're at a monthly open, for instance, and for 2 days, the point of control or the most volume traded at that price, then you know either a breakdown or a breakout is coming. It will never tell us which direction price is going to go, but it can tell us essentially where we want to put risk on, or help us find areas to put risk on. The session volume profile is the indicator. I don't look, like I see people pull random profiles on price, right? They'll just like long-term profiles. Well, to me, that's a random way to do it. Unless you're doing it from a year-to-date chart or a 6-month chart, or if you're doing it like that, then it's not so much just random. But Because when you have all the candles pulled up on the monitor, if you were to pull from like this swing high to that swing low to give your volume, your profile of volume, all you do by changing that data would be to roll the mouse wheel. Now you have on more days, so that changes. So I really don't care about long-term volume profile. I want to see where the volume traded in the daily range, each day's range. So my session volume, it will only always be used like that. So when I go into an intraday chart, I want to see where the most volume occurred. So far for today, all of the majority of the volume traded up here at 68.87. So obviously sellers are shorting it. Right? But here's the thing, if it finds support down here somewhere, and that's a big if, but if it does, and then starts to go back up, then all these people are going to get stopped out. So we know right in here is the level to beat. You can pretty much just look at the chart and see where the point of control would be. Usually it's going to be where the most candles are. But I like to know where. The blue lines are value areas. Doesn't necessarily help gauge a directional bias or anything like that. It's just something that I like to look at. But that's what it stands for, point of control. Point of control. We're getting ready to retest September's VWAP. No, I'm sorry, October's VWAP. We tested it yesterday too. The weekly VWAP is down here. I don't know why I wrote last week's close. Week open. Yeah, this looks pretty significant here. But. Let's see what it does. Moving on today. Did Pingu break down? Yeah, it did. It's breaking down. Bitcoin is also pushing away from that price. So fairly easy to mitigate risk there, right? Fairly easy. So if it does roll over, you will be absolutely positioned perfectly to catch any downside continuation. NFP tomorrow, yes. Yep. So that's what I'm saying. Today, not really the best day to look for fresh positioning. Tomorrow is going to be better, especially for Bitcoin, like I said, because for just the 3-bar pattern, right? Just for this, today could trade in. Okay, let's just forget about this line real quick. This is why I'm not like rushing to put positions on today. We got NFP tomorrow. October just opened yesterday. Today will and can trade inside of this white line and could trade all the way down to here. It could trade all the way down to here today. And it still would look okay for tomorrow. So tomorrow when you get NFP, you might run today's low and then bounce. So tomorrow will be a good day to be putting on positions. Tomorrow, I think today is a set back and watch day. Set back and watch. Unless you're looking for shorts. If you're looking for shorts, then clearly that's the level to mitigate risk from. But longs, I think the long could be tomorrow, not today. But shorts are, yeah, you can put shorts on. There are easier shorts than Bitcoin right now. Yeah, Pingu was a pretty easy one. If you were watching the 4-hour chart. Fairly simple. Right? As this candle closed where this candle opened, and you put in a breakdown or a downside wick. So you literally could have short this open and target that low. Fairly simple. Very easy. You're rejecting the September VWAP, all kinds of stuff, right? Couldn't really break out above the high. Very simple. That's why those are the only two lines up there for me. You go intraday and look at the 30-minute. Very simple. See here? Last swing low right here. Then you broke down, retest. Beautiful. Beautiful. Simple stuff. Sol, please. Yeah, let's go look at Sol. I bought some honey at the store, man. I'm going to tear that shit up when we get off the stream. It's been so long since I've eaten good honey. Did you know most of the honey you buy in a grocery store isn't even real? A YouTube video told me that. And then I went to the store and looked, and oh my shit. They were right. Look at the ingredients on some of them honey jars, and it's crazy. So I bought one that said honey only. But anyways, Solana breaking down. It's still doesn't look like a short, right? But with that being said, Solana looks a little bit rough. Solana looks kind of like Ethereum as far as price structure. I haven't gotten around to putting levels on Solana yet for the month of October. As you can see here, we're still operating inside of September's stuff. But it is time. So let's go ahead and do it. We'll analyze it together. I don't guess we don't really need September's high. I'll put it on there, but it's not going to be relevant until we get above the high month close. So there's your highest monthly close of all time on Solana. And that level is going to be important. A lot of resistance. And it acted as resistance. It didn't act as resistance on the first day. We broke through it on the first day, tested as support, and then got upside continuation. But you did play around with this level for a week or two, right? 2 weeks. So here's what this breakdown could be legit on Solana. Because this is what I'm seeing here. This is your high month close, and now September's high. So picture yourself a buyer and you bought in this yellow box, you are stuck. You are stuck. So if price rejects lower than this box, these people are going to be stuck. If it were to roll over and start heading lower from here, that will force these people to get out. They'll be like, well, screw it. I was hoping it was coming back. It isn't. And then that could give more downside push to Solana. All right, so we need to get rid of this as we got a new weekly. And it's going to be here. So Solana looks okay for this week. It looks okay. But these people are stuck, and it took 2 weeks of consolidation. So since this is the reaction, it's a big sell candle. Boom. So what I would be doing for Solana is, as long as you're trading under this, I would have a very near-term bearish bias. Above the 786, and then I would have to give the respect back to the bulls and say there's a high probability you're going back to that high month resistance. But as long as you're trading under the 786, my bias would be bearish because of this breakdown. This is a very aggressive breakdown after a long-term consolidation at two very important levels. This was the September high, right? It was the September high. Boom, you made a higher high. So it looks like the bulls are in control, right? Here's September's high. So imagine if you were buying the high month close looking for bullish continuation based on the trend you're seeing here. You would be looking to buy the dip. You got the dip, you bought it, and boom, right in your face. So this reaction tells me a lot. So as long as you're trading under 227.18, I would have a bearish bias. Above 227.18, I would not be trying to short it at all. Like, I wouldn't be looking for a short here or here or here. Just here. As long as we're below this, I can say, okay, we might be getting ready to see Solana roll over and put in another leg lower, to the point where we could be coming back to test the yearly opening range again, based on this current market structure. Based on this current market structure. Right here. This stuff. So the short for Solana is 237. And you can hold it as long as you're trading under 237. So where would we put a short on right now if we were wanting to short Solana right now? 225 and 227. Those are two areas we could put shorts on. Let's see if our point of control is also telling us. Okay, see, like Solana looks a little bit different here. The point of control on Solana is down here, down near the low value area, or value area low. So the way this works is, this is your entire day range. This box is your daily range. It shows you where your daily high is, shows you where your daily low is, it shows you where the open is. Now, most of the volume is up here, so it does look like people are shorting it. But the point of control is closer to the value area low. Though it looks like people are trying to buy what is considered undervalue. Now, the value area, let me make sure my settings are set accurate, is supposed to be 70%. That's not 70. That's 30. Oh, wait, no, that's not right. Hang on a second. Oh, it is. Okay, value area. You want the value area to be 70% of the range. And it's set on 70. So this is where the most of the volume traded all day long. So far, most of the volume has been trading up at the highs. So if price leaves this area, the shorts are probably going to be right. As long as you're trading in this blue box, these two blue lines, then it's still anybody's ball game. It's still, the longs could still be in control of price. But yeah, I could put on a short here at 225, put my stop about halfway in the middle, and then try one more shot at 227. I definitely don't want to try to short it here, because it could bounce all the way back up to there easily. You can see how price basically ping-ponged the blue lines, right? And now it could be ping-ponging again. Now, if it just flat breaks down, then we're going to miss that short. But this is the area to look for shorts. So market structure supports looking for a short on Solana. The macro does not. So just looking at Solana technically, as a technical analyst, yeah, sure, you could put on shorts. The macro does not support a bearish trade. Only the technicals do. And that's just for today. But like I said, today could be a very sideways, choppy day for all of these assets. So don't force yourself into a lot of positions today because of FOMO. FOMO is real. People will jump on these shorts thinking that they're going to miss them. And in reality, you might get 30 chances to short this today. Only time will tell. And with tomorrow being non-farm payroll, I would say that's probably more likely. You're not going to see a lot of really big sellers today, in my opinion. You could, but I would say most of them are going to worry about tomorrow. So I do like Solana, and I am going to keep it on watch. I am going to potentially look for a trade on it. Maybe later today or tomorrow morning when we get the news, or after the news at 9:30, because that'll give us time to basically crunch the numbers and see what's what. But yeah, I like 225 or 227 for a short on Solana based on technical price structure, but it doesn't mean you're going to break down. It doesn't mean you're going to see downside continuation. But I like it. Above 227, and I don't even have a bearish bias because you're up on the year. You're bullish on the year on Solana, so buyers could still be buying it up. It's setting up to put in a bearish engulfing here. You got an hour left on this candle, so right here is where you got to get to, and then you got to close under that to put in a bearish engulfing, which would also signal that this candle was a trap. So maybe let this candle finish filling out and then wait for the next candle to open, as you'll have more data to make a better decision. This candle closes like down in here, then you might not need to look for shorts all the way up here. You may get an opportunity to just put a short on at supply on the next wick up into this area. If this candle closes up in here, then it's not a bearish engulfing, and this candle is not a trap. You see what I'm saying? Be patient, be a sniper. Don't just throw a bunch of money at the markets. Wait for your level to get tested and then wait for your reaction. Then attack. Dominance is pushing back up to the open. Bitcoin is losing most of its gains for the day. I mean, it just makes it a whole lot easier to mitigate risk when you're watching objective prices, and you can say, if it's doing this, then I don't want to mess with it. But if it's doing that, I definitely want to mess with it. VIX is pushing back up to 1672. So this is where I would want to see the VIX roll over for bullish continuation. You got daily res right here. So I could potentially buy the S&P if that were to take place. If the VIX were to reject right here, I could buy the S&P here. I don't love buying it because there's a lot of downside momentum and tomorrow's NFP. But we can give it time and we can watch and see what this does. If this does end up rejecting these prices later on today, then we could throw on a bullish position on risk or wait for tomorrow's NFP and then make a decision. It is pulling back, and it's pulling back because of this. Fresh all-time high, filled the gap. Top edge of the expected range high. I mean, all kinds of reasons why we could have expected a pullback today. Dollar also moving up. DXY pushing up. So here's my DXY chart. Trend line held support. Held support. Then it kind of just grinded this trend line right through here. So dollar needs to get back above that. A lot of resistance here. You also have an intersecting, ascending trend line coming in from 2011. The blue line is for the line chart. So there's your line chart. That catches the weekly line chart. The white line catches the candlestick lows. So we have two different ascending trend lines intersecting with the descending trend line here. And the dollar's wick. I mean, it is a nasty trade right here. Nasty, nasty trading on the dollar, man. I would love to see it either break back to the upside or break down, so that way we can get positioned for Q4 on the dollar. Rip Heath Ledger. This hasn't been stopped out yet. What are you waiting for? Oh, it almost got it. It'll get it. It'll get it later. Just give it time. What about Pepe, sir? All right, let's go look at Pepe. I don't know if I have levels on Pepe. I don't trade it very often. Let's see. What do we got? What do we got? What do we got? Okay, so we got August. We want September. There's the weekly 21. There's the daily. Pepe's structure is bearish. It's bearish on the year to the tune of 50%. So it's down 50% on the year. I mean, it's pretty much already gotten beat up as about as bad as it could. I mean, it can get beat up a lot worse, but you're looking at 0.00001. Like, what kind of price is that? That's terrible. This thing is worth nothing. 100,000th of a penny. Yeah, it's in the 100,000th position. So it's like you would need 100,000 pennies, 100,000 of these things to make it worth 1 cent. And that's not how it works. So yeah, it's garbage. I mean, it can go to zero, but it's pretty much garbage. It's priced as garbage. Its chart is garbage. It's bearish. There's not really, I don't like it. I mean, could I short it? Sure. But I mean, I don't know. It's the same as Fartcoin, but at least with Fartcoin, it's almost $1, right? Fartcoin is worth 65 cents. This thing isn't even close to a penny. But if it does move enough to trade it, then you can still trade it, right? Let's see what we would get if we targeted 9 millionths of a penny. That'd be a 10% move. So in theory, we could target 9 millionths of a cent. Yeah, the chart looks bearish. The structure is terrible. Your 200's up here, 100 is there, 50, 21. It's rejecting the 21 right now. The best thing that you can say for it is it does trade. How many tokens in a 24-hour period? 105 million tokens have traded on this in a 24-hour period. So people are trading it. So at least people are trading it. So it is tradable. It's right now testing the 4-hour 200 EMA and rejecting that price. You do kind of have like a supply candle there, but I don't like it when the supply candle is bigger than this candle. I don't like when the supply candle is so big. I like supply candles to be small in comparison, like this, right? So when this wicked up into supply, you could have shorted it. The daily 21 is there, so you could watch that level, but I would be more prone to looking for shorts here or here myself. Like if I was going to short it, if it was an asset I wanted to trade, I would look for shorts at 998 and up to 103. I would leave it alone after that, because after that you're trading back above the daily 21 exponential. I don't know if that's the right price to the penny or to the cent. 994. So it is 994. So it is the perfect location for the daily 21. So yeah, I could short it here, but above the 21, I would have to leave the shorts alone, simply because this could be a buying op for bulls. They could be buying the 21 exponential. So these are your two areas to mitigate risk for shorts on PEP. Who's the cutie pie in your thumbnail? He is an an AI generated image. I told Grok, because I was lazy and bored this morning, to generate me a catchy Bitcoin thumbnail and leave out the words. I'll take care of the words. And that's what he did. So I simply copied and pasted it. You can tell it's an AI generated thumbnail for sure. Because if you look at the Bitcoin tokens, they look waffly and pancakey. They're not perfect circles. Right? Not perfect circles. And some of the B's are screwed up, like this part of the B is screwed up. This has got some screwy stuff going on here. Look at this B back here in the background. The B goes, whoop. It loops completely around next to his ear. Yeah. But I mean, I kind of dig it, as far as like, that's what it looks like what people do on YouTube. I was just playing around with Grok, because the new Grok can do images. He couldn't do images on the last, like Grok, what was it, 3.0 or whatever? He could do images, but he wouldn't do thumbnails. But the new Grok will even give you trading advice. The new Grok is fantastic. The new Grok said that September had a 70% chance of closing up on Bitcoin. That's what the Grok said. And there's your September close. Now, unfortunately, Grok said that 2 weeks ago, and you had this move. We asked Grok what was going to happen in September in this area, but we shorted it last week, so Grok said in this area that September would close up. And it did. Just it closed lower than where he said it would. He didn't say what price it would close. He just said there was a 70% chance that for the month of September. We can ask him right now. Let's ask him what percentage of it. Let's see. Do you think Bitcoin will close up for the month of October. Yes, I do think Bitcoin will close up for the month of October 2025, meaning higher than its current price around 114 to 116. He's wrong. It's 119. 119.1 to be specific. But as of early October, so he must got that from yesterday. I don't know. 114 to 116. So yeah, he's talking about in here. So we could mark this line at 116 and just grok. But let's see if he gives us an average or whatever. All right, this is based on a combination of historical patterns, current technical indicators, and a consensus from recent analyst forecasts and market sentiment. Let me break it down step by step with the key data points. Historical context: October isn't just a meme. October has been one of Bitcoin's strongest months historically, earning the nickname Uptober since 2013. The average return is 22 to 25%. The median return for October is 21%. Positive closes 8 out of 12 years. That's a 67% success rate. September often sees weakness, like the choppy close we just had, but it flips into Q4 rallies. This is all data and stuff I've told you guys. Averaging plus 51% overall, with September 2025 ending green, up 5.5% month to date. This sets up a favorable precedent for continuation. Current market setup: bullish momentum building. Price action: Bitcoin is consolidating above key short-term EMAs, the 20-day and 50-day, around 112 and 114,000, with a strong support at 112,000. RSI is neutral at 52, not overbought. And the 200-day EMA has been rising since late September. The 200-day EMA is also above 50K. I mean, the 200 week, is above 50K. That's the 200 day. Where's the 200 week? So the 200 week is at 53,451. That's fantastic. That's fantastic. So Bitcoin has been bullish for a long time. Back to grok. Where was I? Here we go. Signaling longer-term strength. A break above 118K could trigger a short squeeze on 15 billion in shorts. That's going to be probably a Coin Bureau post. On-chain and fundamentals. Institutional accumulation is accelerating. Spot Bitcoin ETFs saw 1.2 billion inflows last week alone, with BlackRock and Fidelity adding exposure. Hash rate is over ZH's all-time high. Fees are low, and countries like Bhutan, El Salvador are stacking. I don't know if I said Bhutan right or not. Apologies if I said that the wrong way. I mean no disrespect. Stablecoin growth and DeFi activity are also supportive. Macro tailwinds. This is huge right here. This is what most people do not understand. There are huge macro tailwinds for Bitcoin right now, which means we could literally close up at 140 or 180. I've already made the case for this 3 to 4 months ago. Fed rate cuts, post-September easing, and potential liquidity injections, $2 trillion boost risk assets. Upcoming catalysts include the October 7th Massachusetts Bitcoin Reserve hearing, the Solana ETF decision, as per Bloomberg, and October 10, 100% odds per Bloomberg, and altcoin wait a minute. If there is a Sol ETF decision on October the 10th, I don't know that I would want to be shorting Solana right now. We just talked about it technically. But Grok says that Bloomberg says that we will get one in October 10th. That's 8 days away. So you might want to buy Solana right now, or look for Solana to form support somewhere and buy it. Altcoin ETF deadlines. A U.S. government shutdown risk exists. Could spike volatility with a 5 to 10% dip, but 3 out of 5 historical precedents turned risk on for crypto. Forecast consensus upside dominates. Most predictions point to a close above 118 to 120K by October 31, implying a 3 to 8% gain from here. Here's a quick table of recent October specific targets from credible sources. I don't know how credible I would call CoinCodex, Long Forecast, Changelly, or CoinDCX. But here are their October close targets. So CoinCodex has it at 119, 119.6, so high 119s. Long Forecast has it at 124 for October. That's an 8% gain for the month of October. Changelly is taking the more prudent, or the damn it, see, here it goes with the brain farts, a more conservative outlook, saying 119 to 127. Good job, Changelly. That's almost a $10,000 price range for the month of October. Wow. Anyways, and then X Sentiment has it between 120 and 125. Outliers exist. A Bloomberg strategist warns of a crash to 10K on mean reversion and gold outperformance. What Bloomberg strategist warns of a crash to 10K? That dude is wrong. Gold outperformance. Well, it has been outperforming this year for sure, no doubt about that. Bitcoin down 20% year to date versus gold positive 16%. That might be accurate. I haven't checked it. But this is a minority view. Of course it is. And amid broader bullishness. Of course it is. End of year 2025 targets cluster at 150 minus 140 to 180. And that's just going by seasonality trends. That is all. I looked at the seasonals and took the trending info, and those are my price targets. 140 to 180. End of year. But anyways, end of year targets cluster at 150 to 200K, e.g. Bernstein, Van Eck, reinforcing October as a stepping stone. Risks to watch. Obviously, it's not a slam dunk. We all know that. Volatility is Bitcoin's middle name. It used to be, not so much anymore. It's only been averaging about 2.16% over the last 30 days. So for us, that's not even tradable because its volatility has been so low. Bear cases include macro weakness, e.g. weak ADP jobs report on October 2nd, delaying cuts. No. Or profit taking, potentially capping at 110, but with 53% green days recently, and fear and greed at neutral 49. This is it right here. Like, we've never seen a bear market come from a 50 read on the fear and greed index, ever. Usually, you get massive pullbacks when your fear and greed index is in the 90s. Stock market at a 50. Greed for cryptos at 64. I wanted to get it. But anyways, fear and greed at neutral 49. The risk reward skews positive. In short, the data screens buy the dip for October. If you're positioning watch 112 support and 120 resistance. This is my take based on the latest signals. No crystal ball, but the odds favor green. What's your play? See, this AI is literally saying watch 112K for potential support. Well, that's down here. That's the weekly 21 exponential moving average. That's why I said it's so important to watch weekly exponentials, the 21s exclusively, because if you're closing weeklies above it, you are bullish, you are not bearish. Look at this freaking reaction, guys. That is a bullish reaction from the weekly 21. Yep. Looking good, bit boy. Let's go. Probably going to see a breakout. If we get a good jobs number tomorrow. Who is alerting me? Nobody. Okie doke. So yeah, I mean, right now the macro doesn't really support a bearish case. Bitcoin likes 112 support, 120 resistance. And that's his based on that. So yeah, he wants to know my play. But his play is pretty damn good. Because he's telling you to be a buyer at 112 on pullbacks. I wouldn't buy 112 if we pulled back there tomorrow or the next day or even next week. I don't think I would be able to buy it. But where we could watch is the August open or the October open. We could definitely be buyers at 115 or 114.2 on pullbacks. You just smoked a September high. I mean, it is what it is. You're into weekly res here though, right? So you don't want to be a buyer today. There's your highest weekly close. High week close. So we don't want to be a buyer into this. This is potential resistance. We got non-farm payrolls tomorrow. And non-farm payrolls have been really, really big drivers or big movers for the market. Here's a non-farm payrolls print. Right? And then here's a non-farm payroll print. We're getting ready to get another non-farm payroll print. So where could you position here tomorrow? Well, if it's a good number, you could be watching. Here's weekly supply. October's open. Watch Oct open retests and sell it. Depending on what today does. If this ends up being the high of day for USD JPY, I would just watch yesterday's high. And yesterday's high will be wherever today's high ends up being. We won't know till the end of the day. So wherever today's high ends up being, you could potentially look for fresh shorts there tomorrow morning. Tomorrow morning we'll be live for the Discord. So if you're listening to my voice anywhere in here tomorrow for USD JPY, that's on a good jobs number or just like easy bad, not bad, strong bad, like easy bad. Like 0.1% higher on the unemployment rate. We're at 4.3% right now. I forecast is to be unched for tomorrow. The forecast for the unemployment rate tomorrow is unchanged, 4.3%. So if we get 4.3%, let's say it like this. If we get 4.4% or lower, I think it's a short on the dollar. But with that being said, obviously, the market is going, we can't really predict how the market's going to react to any news. Even if we know what the market should do based on news, it doesn't always work that way. You have the news and then you have the market's reaction to the news. That's why it's best to just not even know what the market's going, what the news is or what the news is going to be, because that can give you a bias going into the day, and your bias is usually wrong. Or our bias is usually wrong. Yeah. What about Pepe? We read that. Yep, I read that. The US shutdown. Yeah, that's something that could absolutely destroy risk on sentiment. 141.816 is my projection. It's pretty close to mine. I mean, it's $1,000 off. I'm not going to get that. Mine's anywhere from 140 to 180, and that's just based on sentiment or seasonality. So, like, let's go look at, so you can see exactly why my target is that. So here's the seasonal chart for Bitcoin all the way back to 2020. 2020. So you can see right here is where we currently are. We are lagging. We are lagging the last 5 years sentiment. So if we were to close up 50% on the year, that would give us a 140 price. So right now we're up on the year 26.54%. 2021, you closed out the year at 57%. 2024, you closed out the year up 100%. 2023, you closed out the year up 154%. So I just took the median, if you will, and said, if we close up 50% for this year, that's 140. If you close up 100% for this year, that's 180. So that's why 140 to 180 would be my bullish price projections. And that would be in line with past cycles performance. Now, this year's different because this is the year, the 4-year cycle model guys, or this is, when they're going to start looking for bearish trades. So depending on how many people do that will probably determine where Bitcoin closes at the end of the year. If the majority of your Twitter traders are looking for shorts in November and December for that 4-year market cycle, bear market high, then that will absolutely propel prices up to 140 or 180. Yep. The one thing that the 4-year sentiment or the 4-year market cycle model people are ignoring is we never had ETFs in the past market cycles. The ETFs came online this year. This is the first year in Bitcoin's history that we've had ETFs. And there's 10 of them. And then you've got the 5 MicroStrategy products that also act as ETFs. They generate liquidity for Bitcoin. Not to mention all of the Bitcoin treasury companies. There are so many avenues to trade Bitcoin volatility nowadays The 4-year market cycle model is probably toast. It probably will never trade like that ever again. Now, here's the thing. If you have a massive correction on Bitcoin in November or December, you can short it. You can still trade it or trade for it if you want to. You can own Bitcoin on cold storage with zero leverage and then trade futures. So you could position yourself for the bearish market, even if you don't get one, and still only lose a very small portion of your money. But if it does end up being a bear market, which it probably won't, but if it does, then you'll catch it. And you can accumulate a lot of Bitcoin while it goes lower. But like I said, I don't think that's going to happen. There are too many big players in Bitcoin now. You got many people that owns billions of dollars worth of Bitcoin. Too many participants. You think the 4-year cycle model is shot? It worked perfectly when Bitcoin was the only way to get access to Bitcoin. But now there's so many ways to get access to Bitcoin. It's insane. That's why Bitcoin has basically been consolidating all year long. Think about that. There's only been really a couple months where you had expansion, right? There's your yearly range on Bitcoin, looking at it via monthly candles. So this is consolidation. Here's the breakdown. The breakdown lasted for 2 months, kind of. And then you set the low in April. And then you traded back to the top of the range. Right here's the top of the range. So really, there's been 0 months of expansion. Now, these are expansion months. These 4 months, these are the months where we got off the lows and set fresh all-time highs. So you did have a period of 4 months of expansion in Bitcoin. But if you look at it, there's January's high. Like, we're still consolidating those highs. So now that we've been in a period of 1, 2, 3, this makes 4 months of consolidation. If we break out above this, we could see another 2 or even 3 months of expansion. Right? Bitcoin looks ripe for the picking, my friends. This is a very good, very constructive. You have not seen a rip your face off rally just yet on Bitcoin. This is probably the month to be a dip buyer, a BTF deer. If you want to participate in the upside, you should probably be doing that or looking to do that as you have broken out of your consolidation. And for the trend, I like it higher. Yeah, I mean, it looks good. You can break this chart up into 2 ranges, essentially. Below January's low and above January's low. That's literally it. And above January's low, it's just been consolidation. You've been consolidating above January's high. I said January's low, I meant January's high. You've been consolidating above January's high since May. So 1, 2, 3, 4, 5. This makes 6 months. You've been consolidating above January's high. This thing is getting ready to rock and roll or break down hard. One or the other. I want to lean towards up because I own it. So I'm biased. I am biased to the upside. Let's go. Let's go, Bitcoin. Let's go. It's going up. We want it to go up. Of course we do. But it looks really good. Chart is dirty because of the range is pretty wide. I mean, we're up $10,000 since the weekend. That's a lot. Yen going down. Yeah, tomorrow. Maybe tomorrow I'll put on a position. But I was thinking about seriously buying risk real quick. Just for a scalp. Do like a 6-day call. Let's go down. Now we'll do that one. Screw it. All right, let me read some more of these comments real quick and then we'll wrap this thing up. Yeah. BTC looks like a 3-day bull trap. Yeah, I even took the 3-day off of my favorites, but we'll look at it. No, not yet. You would have to take out the low before you can say it's a trap. You know what I mean? Like, it's a 3-day trend. You've taken out the last 3-day high. And that high took out the previous 3-day high. So you've literally been trending up. What looks what? Maybe I'm confused as to what we call a trap is like this, right? We wouldn't have known. We wouldn't have known, for instance, that this candle was going to be a trap until we took that low out. So now you can say this was a trap because you took out the low. Then you can trade it for the trap. All right. This, you're trading on the highs. It doesn't look like a trap. Not to me. It could be, but like, where are you going? I've already told you where to mitigate your risk from. If you want to take a short, it's here. That's the only place you can mitigate your risk. If it's above this, then you're seeing upside continuation, and you don't want to short into upside continuation. You want to short a rejection, not continuation. This is continuation. So this line is, people are already getting stopped out of it. So like people that shorted it over here, they're about to get stopped out. So they didn't get their move. They didn't get their move. Oh, let's go see what Solana's doing. See? Remember how I said we don't want to short down here because we're probably going to go back up into there. We did. We did exactly that. Yeah. Today is probably going to be a sideways choppy day. That's what I've been saying all session. That's why I haven't even taken a position today. That's why today's thumbnail says price action analysis and not trade setups. We weren't even looking to put trades on coming into today. Because we know more than likely today's going to be sideways. You got a huge news event tomorrow, NFP. And not only that, you had a massive rally yesterday. Bitcoin was up almost 4%, a little over 4%. That's twice as much Its 30-day average has been 2% per day. Yesterday you were up double that. So not only were the bulls in charge of price yesterday, they were doubly in charge of price yesterday. Not only were the bulls right, they were double right. That's not a short. A short is a rejection. When Bitcoin is up over 2.5%, you cannot be looking for shorts because you are objectively getting fresh highs. You are objectively trending higher. You want price to be trending lower for shorts. But it could put in a 3-day trap. You are correct. So tomorrow, when you get the news at 8:30 in the morning, you're probably going to be looking for a fresh day high and then a rejection. If you don't get that, then it's probably going higher. So today, and then, here was a 3-day bullish expansion that didn't play out, right? You didn't get an expansion. Here's your expansion, and then inside day expansion. So expansion, inside day expansion. Today's not the best day to be looking for trades. It's likely going to chop around all day. It's probably going to be difficult to put on bullish positions and bearish positions. Probably just going to be doing this, like trading outside ranges. Right? All day. It could do that. And then it's going to just piss off the bears and the bulls. And by the end of the day, after the account is down multiple percent, it's going to be, damn it, I should have waited until tomorrow. Well, I'm telling you today to wait till tomorrow. Risk markets it's pulled back, but it would just be for like an intraday scalp. It's not like, I'm not looking for risk markets this to be a deep enough correction to put on a long, looking for way up here. Like, I'm only looking for support and then a 10-point or 15-point move to the upside, and then I can get out. So putting on a long down here at the lows, I'm literally only looking for it to go up to here. That's all. And that's only because it's currently testing daily res, the VIX is. It's currently testing an area that it could reject. Now, to fill the gap, well, you've already filled it, never mind. Yeah, never mind, gaps are filled. There is no gap here. Gaps are filled. So this was a huge gap. So there's still a massive gap down here to fill. Because you gapped up. And then you gapped up again, but filled that gap here. And then you gapped up again and filled that gap there. And then you gap down. So this move up is a gap fill move. You have filled the gap to the upside. And now you're into a potential resistance area. And there is a gap to fill right here. A big gap to fill. So if it rejects here, boom, would be my target. But if it's trading above this, I have to respect that it could be going to here. And if that happens, I'll get stopped out. I'll get stopped out. But I took the trade on this. So I'm just looking for this to bounce up a little bit, and then I'll take profits. That's all. Just an intraday scout. Dollar is having a fantastic day today, Wes. I agree with you. It's because tomorrow, I mean, that or they bought the dip hard. This is weird. Very strange price action we're seeing here. Because it's so many people were looking for shorts based on Fed interest rate cuts. And the shorts they could be stuck, and you're seeing a short squeeze here. So we'll see if tomorrow, if that squeeze is done, or if we start putting in fresh highs, then the dollar looks like it's going to want to trend higher for at least the month of October. The dollar moving up and down has not really been affecting risk markets that much. You know what I mean? Like, the dollar has been very sideways for a long time, but if it starts to trend hard, I think it probably would affect risk markets. So right here is about where we would want to see the dollar stop moving. That's this week's high. So maybe the dollar makes a fresh weekly high and then rolls over and is sideways for the rest of the day. So, like, if I was going to be shorting the dollar, I wouldn't be shorting it until it exhausts up here. I guess technically we could put on one more long on the euro. Let's see if we've exhausted or made a fresh weekly low on the euro. Let's see if that's a fresh week low. Yes. Okay, so you've made fresh weekly low after fresh weekly low after fresh weekly low. So if we were going to buy this, we'll put on a 30 pip stop. We'll risk 0.5%, because we might want to put on more tomorrow. But if this is a short squeeze, this trade will get stopped out. So make sure you're okay with your risk if you take this. I don't know that this is going to be it. You know what I mean? If the dollar is squeezing shorts, it could go up literally all day today. I think it's a pretty aggressive move. But it isn't really. It's only up 0.4%. The euro is not down aggressively. The euro could go down aggressively. 0.36% is what it's moved so far today. It's about on the edge of what it usually does. That's why I'm going to go ahead and throw on a little bit of risk here. Right on the edge of what it usually does. And then tomorrow, if it's trading in this same area, tomorrow, right here, if it's still trading inside of this box, then I could potentially wait for a fresh low to be made and then average down, get my position a little bit lower, and get ready for it to haul ass in the opposite direction. Now that we've stopped out all the whole week, everybody that's traded the euro this week that bought the euro has been stopped out. So tomorrow, the only people left to stop out on the euro will be me or anybody like me. So now the risk would be up in here. These people need to be stopped out now. So anybody that shorted after Wednesday, they're the next people to be on the chopping block. So that could be my target. London session Wednesday traders. So anybody that's holding shorts from Wednesday at the London session, their stops are up here. Target, like baguette, only with tar in it. Yeah, we'll see. Risk market's pushing up a little bit here. VIX rejecting. Remember, down here is where the liquidity is. This is where we want to see it go. Might not today, but maybe tomorrow. Blah. Bitcoin squeezing those shorts, baby. I'm telling you, man. Bitcoin's looking good. All right. I hope it's not a bull trap, Bill. I hope it's not. Could be, but I hope it's not. I want to see Bitcoin break out. I want to see Bitcoin like absolutely smoking shorts for the rest of this year and going into Q1 and Q2 next year. I think that would be phenomenal. It would be absolutely fantastic for my bottom line. And that's what we're here to get, the bottom line. And that's the bottom line. I like DXY to 98.83 today. Let's see. Today? No, you don't mean today. 98.83's up here. It won't get there today. No way it can get up there today. I mean, it could, but let's see what the daily range is on Bitcoin. I mean, on the dollar. See, this tool, if you guys don't use it, you really, really should, as it gives perfect targets. So the dollar's 14-day average is roughly, we'll just call it 0.56. It's already done that today. From low to high, it's probably done over that. Yeah, it's went about 0.6. So actually it could. So double that would be 112. Yeah. 98.60 would be a 2 standard deviation move. Damn. Yeah, not today. I didn't figure you meant today. I know what you mean. Tomorrow, it could get up there for sure. Look at NQ. Trap from July 12. August 12? Yeah, that's August 12. Here's July 12. That's a Saturday. I think you mean August 12. Yeah, well, it's in the supply zone right now. That's a supply zone because of that trap. Because this is a bull trap. When you break out like that and then you take out the high and then smoke the lows, that is a bullish trap. I agree. Oh, I mean, that is your daily supply zone. So yeah, that's fair enough. Maybe Bitcoin rejects there. I mean, that's a good close. Even Fartcoin looks good now. Look at what Fartcoin did. So Fartcoin longs are going to be a little bit more difficult now. But right here, if it could pull back into here and hold this as support moving on for Fartcoin, you could buy that. You could technically buy that. If it gets under here, if you're watching 30-minute candles, your threat is here. So if you're trading under this white line in the next 30 minutes, then this is the threat. But as long as you're not trading under this, you can be long from here on Fartcoin. 6664. Because I'm pretty sure, like, I'm given that tomorrow is NFP, I'm pretty sure. Damn it, I just screwed everything up. What is going on here? There we go. Yeah, my mouse bounces off of stuff. All right, so yeah, I mean, I'm pretty sure the VIX is done more than likely for the day. Like, it's, unless it has a really big day. But more than likely, this is probably going to be the hive day. Or it makes one more hive day and then stops. The rest of the day will probably be choppy, or we'll give all this back. As Bitcoin continues to push through that demand zone, and then... So Bitcoin is not being choppy today. It's getting upside continuation. So that's just how many shorts were smoked yesterday. All the shorts that were trying to short it yesterday getting smoked today. Euro strong compared to GBO. Euro is strong compared to GBO. GB pound. You're probably correct on that. Just look at the watch list. Where is it? Currency futures watch list. Yeah, the pound is euro. Here. Euro is actually weaker than the pound. This data is delayed though. But there you go. There's your percent change right now. This is from 15 minutes ago. The euro's up 0.4%, or down 0.4%. So yeah, it is stronger. Stronger than the pound. The pound is down 0.6%, or almost. It's a little bit stronger. Or just look at pound versus euro. Or is it euro pound? I don't trade this pair. Yeah, it's euro pound. Yeah. Yep, euro's up compared to the pound. This is live data here. Euro's been stronger than the pound pretty much for a long time here. You're getting ready to potentially break out of a trend year high. There's your yearly open on the euro pound. There's your low of the year, high of the year. Boom. Year high. For now. There might be a long setup here. Well, I don't know. Maybe not today, but I mean, it's trading above last week's low. I don't know if I'd want to buy it because of this, but yeah, they're buying the 21 exponential. But it might take a couple days for it to suss out what it wants to do here because of the 21 exponential. But it might be a trade tomorrow. I don't know. I mean, it looks like it's bouncing hard. It just retested yesterday's open. So that's probably it for the day. Because you're seeing a pretty vicious reaction there. Probably going to chop sideways in this range for the rest of the day. So maybe tomorrow we could look for long trades on this. If we think that strength is going to continue. $87015. So there's their 21 EMA for the day. Yeah. It looks like it's trying to break out to the upside. Pretty deep correction on the weekly. We took out last week's low. So as long as we're trading above last week's low tomorrow, I think we can look for longs on the pound, euro versus the pound. We'll keep it on watch, Wes. We might be able to take a trade here. All right, you guys have a... Let me see here. Let me make sure no other... XY, not for today. I like the October target. Yeah, gotcha. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.